Hey everyone, John Henry here from School of Trade. Today we're going to be taking a look at a short trade here on crude oil. Lots of levels of resistance all coming into play in the exact same place. We have a channel high coming into play. We have a prior swing low, and actually two of them all coming into play. And we also have a potential trap above that little prior swing right back here. Everything pointing to the downside off of this high. Even in the face of this strong move up, the sellers have a lot more emphasis at the moment. So we're going to be getting in short here. Let me get my stop in place. Now in terms of the target, we have to be cognizant of the fact that we're not really getting good follow through from the bears. We are seeing strong moves from the bears, but when it comes time to really put up, they get down to the lows and they really just kind of fail right back up in. So I'm expecting this low to be our objective, and when we get there, we're probably just going to fail back up again. So we need to make sure that our target versus our stop is going to be equal, but we have to kind of understand that if it can't get our target relatively quickly, then we're going to need to make sure to get out possibly a little bit early at that prior little swing level. So right now, the primary objective is going to be going down to this swing low here. If we can break through it, then we should be good to go for a bigger target down to 35, but we're not expecting much more than that because every time that's happened before really hasn't gone very far. Now, the nice thing is if we measure from that little prior breakdown to this one, we do still have a little bit of leeway to that push down there. So that puts us at about 45.29. Our target's up at 35. So we do have a little bit of room where you could look for an equal breakdown of that potential drop lower. But the one thing that I like to consider is the opposition, right? They had a break higher from there to there. So I'm looking for that as the potential breakdown area, and that puts us at right around 33. So with our target at 35, it's kind of splitting the difference. It's right between the two, and I think that's probably a pretty good place for it. So we'll leave the target where it is, and that lines up perfectly with our stop. It's a 1-to-1 risk reward, and we'll wait for the sellers to come in and see if they can get that move going down and break through that swing low. So we'll give the sellers a little bit of time here, and we'll see if we can get that target. All right, so we saw the buyers attempt to take the market back before they met the lows, and that's important to note because that's actually, we haven't hit the objective yet. There's no reason to become a buyer until we get a little more proof, and they form this really, really big bull candle, but it's really weak. We have a lot of wick on the top, there's a lot of wick on the bottom. They're not really showing much emphasis outside of the fact that maybe they're trying to get a trap going in the opposite direction, and if they would have continued with another bull candle, then I have no interest in staying in it anyway. But the fact that it went one tick above, that would have trapped in aggressive buyers and immediately turned back down. Now we have stops underneath this low where buyers are going to get stopped out, and that should be enough fuel to drive the market down to get that objective at 35. Because of that turn higher and the immediate turn back down, I've locked my stop in at 45.70. I don't want any more risk on the table, and as soon as we hit this low down here around that 40 level, I'm going to be moving the stop a little bit tighter still, especially given that really, just in context, we had a big bull spike, ended up being a bull trap into a down move, and then a bear breakout. There we go. That's our reason to lock the stop in nice and tight. Now, actually, that came one tick away from the target, so let's lock in even further, and then we get the target fill. Beautiful little pop lower, and that's that stop run that we were looking for. We knew buyers got trapped on this one. Not a good enough candle to really buy, but the aggressive ones that did, well, they kind of paid the price for it, and they got slapped right back down. Now, notice where we're finding a lot of support coming in, right? Around that area that we saw a break higher. Not a big surprise there, and that's why I wanted to make sure that our target was at least ahead of that, even using a 1-to-1, and it worked out beautifully. So that's going to do it for this one. Gorgeous example of just picking apart the market in what's going on here with the sellers taking back over, shoving the buyers right out of the way, huge areas of resistance, all stacking up in the same place. You can't really ask for a much better setup than that. So if you have any questions about it, feel free to send an email to School of Trade. Don't forget to check out our trial at schooloftrade.com, and as always, we'll catch you next time.